Well, it has been a wild week for volatility. On Monday, the VIX jumped by more than 20%. Wednesday saw a 24% move higher. And today, the VIX spent most of the day in the red, down as much as 13% before reversing course and finishing the day firmly in the green. The VIX now up a whopping 40% this week alone. So is this volatility here to stay? And is this something investors should be worried about? Here with some answers is Dan Deming. He is an investment advisor at Equity Armor Investments. Dan, thanks so much for joining us. So wild day down there at the CBOE. What's going on?
Yeah, it sure was, Olivia. I tell you right now, we kind of just saw this market start to unravel here in the afternoon, and with it we saw extensive volatility buying. I think you're seeing a big pickup now in realized volatility, where that's what the market moves on a day-to-day basis. And with that, you're seeing the market basically now price in these moves that it's starting to realize, and that's why you're seeing the VIX up over 20 on the close. All
right, but what's driving this? Obviously, we've seen a huge move in the price of oil this week. As I said, West Texas below $60 a barrel today for the first time since 2009. What is the source of all this volatility?
Yeah, I think a couple of things. Number one, the realized volatility, I think, is driving the volatility spike in the VIX and the other volatility indexes. Number two, you see the oil, like you said, now down below 60. The OVX, which is a measure of a CBOE measure of applied volatility on the oil sector, up significantly as well. So what you're seeing this volatility start to bleed into other sectors. And I think ultimately, when you look at the high yield space, look at the JNK ETF, down significantly these last couple of weeks. And with that, I think you're seeing now 19% of that ETF is made up of oil sector issuance, basically. So what you're seeing here now, I think, is some concerns that, some of these high-yield loans might ultimately start to look, possibility of default down the road. And I think that's feeding into this uncertainty.
What are you hearing down there from traders on the floor with you? What is the mood among them? Do they think this uncertainty is here to stay?
Yeah, right now, moving into December, typically, which is a quiet period, now that you've seen this flare-up in volatility, and moving into January, where we saw extensive call buying even last week in the January 17 calls on the VIX and the January 20 calls on the VIX. So, yeah, I think there is some concerns now that there's been market participants out there protecting for a potential move lower as we roll into January, and maybe we're just getting it a little bit before, the expectations. So big call buying today into December options, even though they expired next week, saw active buying all the way up to the 30 strike.
And Dan, how about you? How are you looking to trade the VIX?
Well, right now, we're basically kind of adjusting as far as, we've had a good run here year to date as far as the market. So we are looking to kind of take some money off the table. Looking at volatility, we actually were able to rebalance last week. Now we're looking at opportunities maybe to lay off some volatility and look for other areas where now, as the market comes lower and to the end of the year.
What do you think are the biggest risks to the market right now?
Well, I think there's the risk right now is that basically the backstop that is in place. We saw the market in October really under some duress, and then Japan stepped in, the central bank stepped in, and then I think now the ECB has kind of telegraphed that they're going to be very accommodative. But, ultimately, that could, I think, only can affect the markets for so long. That was expected the markets a lot longer than we anticipated, with what's happened here in the United States. But ultimately, I think that if that starts to lose, its play in the market, that could also lead to lower prices.
All right, Dan, we'll have to leave it right there. Dan Deming, thank you so much for joining us for On the Markets. I'm Olivia Stearns.